Good morning. I'm Lauren Hayes for the Finance News Network. Stocks fell Friday as traders evaluated September's jobs report, which showed the unemployment rate continuing to decline and sparked an increase in interest rates concerns. The US economy added 263,000 jobs in September, slightly below a Dow Jones estimate of 275,000, the government said Friday. However, the unemployment rate came in at 3.5%, down from the 3.7% in the previous month, in a sign that the jobs picture continues to strengthen, even as the Federal Reserve tries to slow the economy with rate hikes to stem inflation. The benchmark 10-year Treasury added 6 basis points to 3.8%. It has seen a volatile couple of weeks, falling below 3.6% briefly earlier in the week after surpassing the 4% mark last week. The focus will now shift to the September CPI numbers and September Fed Open Market Committee minutes. The Dow Jones Industrial Average fell 2.1%, the S&P lost 2.8%, and the Nasdaq slid 3.8%, which is less than 1% above its low of the year. For the week, the Dow rose 2%, while the S&P added 1.5%. The Nasdaq eked out a 0.7% gain. Across the sectors, oil and gas stocks outperformed as oil rose about 3% to a 5-week high on Friday, carried higher again by an OPEC Plus decision this week to make its largest supply cut since 2020. Helping drive equities lower on Friday was a drop in semiconductor stocks following an announcement from the White House that it will implement export controls that limit China's access to US semiconductors. Semiconductor stocks are the most cyclical part of the technology world because of the boom and bust nature of chip demand. This year, the industry has gone from a worldwide shortage of chips to a glut in a matter of months. With recent tensions between the US and China, and with the new investments in US manufacturing, this could see the imbalance in supply and demand worsen rather than improve. Advanced micro devices stocks tumbled 14% after the chipmaker warned its third quarter revenue would be lower than anticipated. Shares in other semiconductor groups also fell, with Qualcomm down more than 3% and Nvidia down 8%. Wall Street banks have slashed their expectations for third quarter earnings of big US companies by $34 billion over the past 3 months. Analysts are expecting companies on the S&P 500 to post earnings per share growth of 2.6% in the July to September quarter. That figure has fallen from 9.8% at the start of July, and if accurate, would mark the weakest quarter since the July to September period in 2020, when the economy was still reeling from coronavirus lockdowns. Although the fall across the markets has meant the earnings revisions are being priced in from a valuation perspective. On the currency front, one Australian dollar is relatively flat to the US dollar on Friday, buying 64.02 US cents. On the commodities front, gold lost 0.7%, silver fell 2%, copper dropped 1.7%, and oil gained 4.7%. The SPI futures are pointing to a 0.9% fall. I'm Lauren Hayes. Have a great day.